Welcome back, everyone, to today's Executive Explainer. If you're a busy C-suite leader, supply chain manager, or procurement specialist, you are exactly in the right place. Today, we're putting on our analyst hats to unpack the global intelligence you've been waiting for on the general purpose polystyrene, or GPPS, and high-impact polystyrene, HIPS, markets for the first week of July 2026. Right now, across the globe, we are witnessing a pretty aggressive bearish squeeze, and it's directly impacting trade, pricing, and your procurement strategies. So my goal today? Cut right through the noise and give you the structured, fast intelligence you need to make those high-stakes decisions. To save you some time, here is our briefing roadmap. We'll kick things off with U.S. trends, look at EMA markets, pivot to Asia and a quick tech update, do a deep dive into India, and wrap it all up with strategic recommendations. All right, Section 1, U.S. trends easing production costs. So what's driving the downward pricing narrative stateside right now? Well, it's basically all about retreating feedstock costs. When raw material expenses ease up, that pressure valve releases almost instantly. We're tracking a very clear $10 per metric ton drop in FAS Houston prices. For you executives managing massive volumes, this $10 shift is an absolutely crucial leading indicator. It tells us that this easing trend is fundamentally altering short-term cost structures. Let's lock in your new baselines for North American procurement. GPPS is currently sitting at $1,640, with HIPS just a bit higher at $1,680, both on an FAS Houston basis. Meanwhile, expandable polystyrene, or EPS, is holding the line at $1,590 per metric ton on a CFR U.S. West Coast basis. Moving right along to Section 2, EMEA markets, Europe and Turkey's downward shift. Looking across the Atlantic, we essentially have a tale of two neighboring markets, but they are both anchored by one universal weight: weak demand. In Europe, sluggish demand and lower production costs have triggered a clean €20 drop across the board. That brings GPPs to 1980 euros and HIPS to 2080. But Turkey? Turkey is the fascinating anomaly today. They're actually battling rising freight rates, which, normally spikes prices. Yet, demand is so dull and supply is so ample that prices still took a hit. GPPs and HIPS dropped by $20, and EPS took a massive plunge. I'm talking an $80 drop, down to $1,545 per metric ton. It just goes to show that right now, market apathy is literally overpowering freight inflation. Which brings us to Section 3, Asia focus and tech updates. Bearish sentiments prevail. Shifting our lens to China, the overarching vibe is just extreme caution. A really murky economic outlook has forced buyers into a very strict need basis holding pattern. Nobody wants to hold excess inventory right now. This total standstill leaves spot prices for GPPS idling at 8,300 yuan per metric ton and HIPS at 9,100 yuan. When the world's factory floor adopts a wait-and-see approach like this, it sends a crystal-clear signal to global supply chains. Brace for sustained sluggishness. In volatile environments like this, real-time intelligence isn't just nice to have. It's your best hedge. If you want to bypass the endless spreadsheets, you can actually leverage Polymer Bazaar's AI-powered chatbot right on WhatsApp. It's super easy. Just save +91 93746 24365 to your phone. Text the letters PS, and literally within 5 seconds, you'll get the latest market trends and AI predictions sent right to your device. It is a massive time saver. Now let's get into Section 4, India deep dive and currency, massive price slashes. To set the stage in India, overseas imported HIPS offers for early July shipments are actually holding quite firm. They're assessed at around $1,450 per metric ton CIF. But locally, totally different game. The Indian Customs Department just revised the USD to INR exchange rates as of July 3rd. Imports are now set at 95.20 rupees per dollar and exports at 93.50. If you're balancing international shipments against domestic alternatives, you've got to update this currency math in your models right now to protect your margins. But here is the single most critical data point of the week. Supreme, a major local producer, just slashed its GPPS and HIPS prices by 4 rupees per kilogram effective July 1st. When you run the conversion on that, it's a sheer drop of approximately $42 per metric ton. Let that sink in for a second. In a week where the US and Europe are haggling over $10 and $20 adjustments, a $42 slash in India is a highly aggressive, almost desperate move to stimulate local buying. Finally, let's look at Section 5, Strategic Recommendations, the bottom line. So, we've mapped the data from Houston to Europe, China, and India. Now, how do you actually maneuver your business through this? Well, we have to ask, what is the current buying pulse? Honestly, despite the aggressive price drops we just analyzed, overall global demand remains distinctly dull. We saw a few brief purchasing blips right after the recent price cuts, but they flatlined almost immediately. Retailers are sitting on plenty of stock, and raw supplies are easily available. It is firmly a buyer's market right now. But the funny thing is, buyers just aren't biting. Which brings us to your executive bottom line. The official recommendation right now? Buy strictly on a need basis. Actually, scratch that. Let's be firmer. Do not build inventory right now. If demand doesn't strengthen soon, local producers are likely going to be forced into yet another round of price cuts just to clear their floors. By holding off on bulk, long-term procurement today, you're positioning your company to capitalize on potentially lower price floors tomorrow. If you're looking for the full, granular data to take into your strategy meetings, the complete, detailed PDF report is available for you at polymerbazaar.com/futuretrend/GPPS. Definitely grab that for your records, and feel free to share this briefing with your peers who could use the intel. I'll leave you with this final thought to chew on. With global markets universally squeezing prices downward and buyers just comfortably waiting in the wings, how long can producers realistically absorb these cuts before supply chains aggressively tighten and causes sudden whiplash in pricing? It's the multi-million-dollar question your procurement teams need to be modeling right now. Thanks so much for joining me for this explainer. Stay focused, stay informed, and we'll catch you in the next market briefing.